Hello everyone and welcome to today's webinar. My name is Sachin Kotecha and I'm really excited to have you all here. The title of today's session is Retail Forex Traders versus Professional Forex Traders. What's holding you back? This is a big topic and for many of you possibly a turning point. I want to be clear about something up front. This is not going to be another fluff-filled webinar with recycled content. I'm here to give you an honest look at what truly separates professional Forex traders, the ones who do this full-time with consistency, with edge, from the vast majority of retail traders who find themselves stuck, frustrated, and constantly resetting. If you've ever wondered why your results don't match the effort you're putting in or why your trading feels inconsistent, you're at the right place. My goal today is not just to show you the differences, it's to help you understand how to start closing that gap. I'll be sharing insights from years of experience, both my own and from mentoring traders across different stages of development. So whether you're a new trader to the market or you've been at this for years, you'll walk with clarity, insight, and most importantly, a vision for how to level up. So grab something to take notes on, switch off all distractions and settle in. Let's get started. So let's start with the hard truth. Most Forex traders stay stuck in retail mode, not because they're lazy, but because the structure just isn't there. Think about it, retail traders often learn in fragments, a YouTube video here, a free webinar there, maybe a strategy from a forum, but there is no cohesive framework, no system to integrate into something actionable and scalable. One of the first major issues is a lack of process. Professionals don't approach markets wondering what to do. They have a game plan before the markets open. They know what pairs they're watching, what the macro backdrop is, what the technical setups look like, and how they're going to manage risk. So retail traders, they're often reacting. So they're like, oh, this broke the 200 EMA. Is it time to buy? Oh, the RSI is oversold. Shall I sell now? This kind of thinking is not a plan. It's guesswork. Then there are the emotional sides: fear, greed, revenge trading, hesitation. Professionals aren't immune to emotion, but they have built rules to manage it. They don't wing it. They follow systems, and those systems give them confidence. And perhaps the biggest gap, no feedback loop. Professionals constantly review their performance. They analyze their data, tweak their approach, and document their decisions. Most retail traders don't even journal their trades. If you don't track it, you can't fix it. So the problem isn't just bad strategy. It's the absence of a complete framework for thinking and acting like a pro. So what exactly makes someone a professional trader? Well, first, and this is important, it's not just about account size. You can have a £10,000 account and trade professionally, and you can have a £100,000 account and still behave like a retail gambler. Professionalism isn't about the balance, it's about the process. A professional trader treats trading like a business. They have daily routines, risk management protocols, review procedures, performance metrics, and clear decision-making processes. They don't ask, is this a good trade? They ask, is this trade part of my edge? Does it align with my model? They use rules, not feelings. And when they take trade, it's not just because the price broke a trend line. It's because there's a reasoned narrative supported by technicals, fundamentals, and often sentiment. Pros also trade less often, but when they do, the trades are high conviction and well structured. It's not about being in the market all the time. It's about taking asymmetric trades when the odds favor them. And crucially, they review everything. Trading isn't about winning every trade. It's about understanding your own system and continually refining it. That's what defines a professional. It's not magic, it's system, structure, and self-awareness. So this is one of the most retail traders ignore, the one most retail traders ignore, and it probably the most important. Mindset, psychology, emotional fitness. The difference between a trader who panics under pressure and a trader who calmly executes despite market noise, it's not intelligence, it's not even experience, it's psychological conditioning. Professional traders aren't superhumans. They just train their minds to approach trading like a game of probabilities, not a game of being right. The average retail trader has an emotional roller coaster running in the background. This trade has to work. I lost the last one, so I need to make it back. What happens if I miss this move? These thoughts hijack your process. Pros, on the other hand, have a different mental script. They ask themselves questions like, does this meet my criteria? What's the expected value? Is my risk defined? And they understand that any one trade is just one of hundreds. They don't obsess over the outcomes. They trust their edge to play out over time. And here's the most powerful mindset shift. Pros are okay with uncertainty. They know there's no such thing as a sure thing in trading, and they're not trying to eliminate risk, they're trying to manage it intelligently. That's what separates a cool-headed decision maker from an emotionally triggered happy trader. This mental edge alone can turn a struggling trader into a consistent one. I want to be crystal clear about something here because this is where most traders go wrong. Risk is not something you think about after the trade. It's the first thing you define before the trade even begins. Professionals start with risk. They know exactly how much of their capital is on the line, what happens if the trade fails, and how it fits into their broader portfolio exposure. Contrast this with retail traders who sees the signals, throws on a position, and then hopes it works out. That's backwards. Let's look at how pros manage risk. They size their trades correctly. There's no 5-lot YOLO trades. Position size is determined by volatility, stop loss distance, and account risk, not guesswork. They set stop losses with logic. Pros place stop losses based on market structure, volatility, or average true range, not based on how much they feel comfortable losing. They don't revenge trade. One loss doesn't trigger an emotional spiral. It's part of the system. Losses are pre-accepted, not resisted. They manage portfolio level risk. So for example, if they are long euro dollar, they're not also long GBP USD, AUD USD, or New Zealand dollar USD because they all have the dollar in the trades, so they avoid correlation traps. Ultimately, risk is the only thing you can control. You can't control the outcome. So professionals make risk the cornerstone of every decision that they make. This is where most people think trading begins, strategy. But for professionals, this is the last thing that gets built. You see, most retail traders jump straight into the fun stuff. What indicator should I use? What's the best entry signal? But pros ask completely different set of questions. So for example, a pro would ask, what is the reason for this trade? What's the broader market narrative? Professionals build thesis-driven models. This means that the trade idea starts with something bigger, a macroeconomic divergence, a shift in interest rate expectations, a change in inflation outlook, or geopolitical flows. Then and only then they use technicals to fine-tune the entry and exit. It's like building a house. The foundation is macro and sentiment. The design is technical. And they don't just run one model. Pros stress test their strategies across market types. So high volume, low volume, trending, choppy markets. They want to know, does this idea hold up across conditions? Most retail traders don't even have a strategy. Pros have documented playbooks, rules, conditions, triggers, and adjustments. That's what strategy really is, not setups, but systems. Let's talk about one of the most underappreciated differences between retail and professional traders: information access. Think about it. You're making decisions based on the same free resources as everyone else: public news headlines, social media buzzes, or the economic calendar on your broker's app. How can you expect to gain an edge? Professionals pay for high quality information. They use Bloomberg terminals, institutional order flow tools, sentiment data from positioning reports, and real-time research from economists and analysts. This gives them a completely different lens. So for example, while a retail trader might be reacting to interest rate announcements, a professional might have already modeled the potential outcome days earlier, tracked central bank commentary, and positioned accordingly. They also understand how to interpret market expectations versus actual outcomes, not just raw numbers. It's not just news, it's the context around the news. Pros know what data matters, when it matters, and how the market is likely to respond, not in theory, but based on order flow and positioning. If you're using the same free tools as everyone else, you're not ahead, you're part of the herd. The more professionals see, the better decisions they make. It really is that simple. Now let's get into something that many retail traders don't even realize is costing them, and that is execution. When you place a trade on MT5 or CTrader, you might think it's instant, clean, and efficient, but there's a hidden world behind that click. Retail orders often go through brokers who either aggregate markup spreads or route trades to liquidity providers who may have a better view of the order book than you do. That means you can experience slippage where you don't get filed at the price you expected, spread widening, especially around news events, order execution delays in milliseconds, which matter in fast moving markets. Professional traders, by contrast, have access to direct market access or low latency execution. Pros understand that execution is a cost center, and they do everything possible to reduce friction, slippage, and exposure to being front run or gamed. If they are trading retail, they automatically giving up the edge unless your broker infrastructure and execution logic are solid. It's like driving a Ferrari on a dirt road. The performance can only go so far if the environment isn't built for speed. This is one I wish someone had told me in my early days trading. More screen time does not equal more profit. Most retail traders believe they must be glued to their screens, watching every candle, every tick, every news update. But what that does is burn you out, cause decision fatigue, and lead to impulsive trades. Professional traders are extremely structured with their time. They don't chase every move, they plan their sessions in advance. A typical pro might spend 30 minutes pre-market assessing overnight developments, 1 or 2 hours scanning for setups, the rest of the time in execution or management mode, not random chart watching. They follow a routine, weekly macro reviews, daily prep, monthly performance reviews, and dedicated learning and research time. And they don't trade unless the setup is there. Contrast this with a typical retail trader who opens up their laptop with no plan, flips through 20 charts and trades whatever looks good. Professional traders build lifestyle alignments around their workflow. They protect their energy and focus because they know that those are limited resources. They don't get bonus points for staring at charts all day. You get rewarded for patience, discipline, and only acting when the setup is clear. Let's talk about tools, because the platform you trade on and the setup you build around it makes a massive difference to your performance. Professionals don't just sit with one screen, one browser, and a TradingView chart. They build command centers, dedicated high efficiency environments where they can access all the key market data in real time. So here's what a typical pro setup might include. So it might include 3 to 6 monitors showing live charts, news feed, execution terminals, sentiment and sentiment dashboards, backup systems in case of internet or platform failure, fast internet with low latency routing, access to premium tools like Bloomberg or proprietary terminals. Beyond that, pros also automate their workflow where possible. So they use tools for automatic journaling, trade tagging and review, risk model calculations, email or calendar triggers for economic events. This isn't about fancy tech, it's about removing friction from the decision-making process. The goal is clarity, speed, and minimal distractions. Retail traders often try to do this all from a laptop in the living room, and that's fine to start off with. But as you grow, you want to build the kind of environment that supports your focus and flow state. Every click, every delay, every distraction costs you money. Pros set themselves up to win, and their infrastructure reflects this. You wouldn't run a business without tracking revenue, expenses, and customer data. So why do so many traders trade without tracking their performance? This is where professionals completely separate themselves from the pack. They track absolutely everything. Every trade, every outcome, every mistake. A professional trader's journal isn't just a list of trades, it's a diagnostic tool, a mirror that shows what's working and what's not. So here's what pros track: entry reasons and confluence, risk reward before execution, how they felt emotionally at the time of the entry, execution accuracy, exit logic, not just the result. Then every week or month, they sit down and review that data. They ask, where am I bleeding edge? What setups are consistently profitable? Am I trading emotionally under certain conditions? This feedback loop is non-negotiable for consistency. Meanwhile, most retail traders don't even know their average win or loss size of their most common mistakes. They're flying blind. Data creates clarity, and clarity is what drives performance. If you're not measuring it, you can't improve it. So let's bring this all together with a real world example. Same currency pair, same direction, but two completely different approaches. Let's say euro dollar is trending upwards. A retail trader sees a break of a trend line and an RSI crossing above 50. They jump in with a tight stop loss, risking 3% of their account. They don't have a strong thesis. They're trading based on a pattern and an indicator signal alone. Now let's look at how a professional approaches the same pair. They've been tracking monetary policy divergences between the European Central Bank and the Fed. They know that inflation in the Eurozone is moderating, but the US is showing signs of slowing growth. They model the rate expectations and are beginning to shift in favor of the euro. On top of that, they check sentiment. So the CFTC data shows large speculators starting to unwind USD long positions. Price action confirms structural breakout and volatility is low, perfect for risk-defined positioning. They size their trades based on volatility and place a stop loss just beyond the invalidation point of their macro thesis, not just a random number of pips. Then, regardless of outcome, they journal the trade, track the results, and benchmark against similar setups. Same pair, same direction, but one is emotional and surface level, and the other one is structured, strategic, and professional. This is a level of thinking that changes your trajectory as a trader. So now that we've looked at how professional traders think, plan, and execute, let's talk about something that often goes unnoticed. Pros don't operate in isolation. When you're on a trading desk, whether at a fund, prop firm, or institutional bank, you're surrounded by structure. You've got senior traders reviewing ideas, morning briefings with macro analysts, trade review sessions, risk managers overseeing exposure, colleagues challenging your bias. You're not just winging it alone, you're held accountable. You have a system, you're plugged into a professional environment. Compare that to most retail traders. They're trading from their bedroom or living room, no feedback, no review, no structure, and no one telling them when they're going off track. That's not a weakness, that's reality. But it's also the reason why many traders plateau or spin in circles. The truth is, you can't grow consistently without support. The best traders in the world still review their trades with others. They still have coaches, they still learn constantly. So if you ever felt like you're doing everything you can, but you're still not breaking through, it might not be your strategy. It might actually be your environment. So let me ask you this, what's really holding you back? Is it that you haven't worked hard enough? I doubt it. Most traders I speak to are putting in hours every week, reading, watching videos, testing strategies. But here's the problem. There's no structure to that learning. no feedback loop to catch mistakes, no systems to build on wins, and most importantly, no shift in mindset. If you keep doing what most retail traders do, bouncing from strategy to strategy, reacting emotionally to wins and losses, and hoping the next tweak is finally fixes it, you'll keep getting the same results. The turning point happens when you stop chasing trades and start building a professional trading process. You've seen the difference now. Professional traders plan, journal, and review. They build edge around themes, not signals. They operate with precision, structure, and control. And the best part, it's not out of reach. You don't need to work at a hedge fund to start trading like a professional, but you do need to get out of the retail mindset, and that takes intention, structure, and support. That's why I've created something to help. So over the years, I kept meeting traders who were stuck not because they weren't smart or motivated, but because they were missing a clear path. That's why I created the mini MBA in applied professional Forex trading, a step-by-step program designed specifically for retail traders who want to trade with structure, discipline, and with the mindset of a professional. This isn't a signal service or one-size-fits-all course. It's a guided transformation from amateur trading habits to institutional grade decision making. How it works? Well, we start off with a core frameworks professional traders use, which is macro models, trade structuring, and risk systems. So you learn to build trade ideas around fundamentals, sentiment, and technical alignment, not just signals. This program is designed to bridge the exact gap we've just unpacked. So if this session resonated with you and you are serious about stepping into the next level of your trading, I'd love to invite you to join us. Thanks for your time today. And remember, you don't have to trade like a retail trader forever. You just need the right process, the right support, the right mindsets to elevate. Let's make that happen.